This conference will now be recorded.
Good evening, ladies and gentlemen. This is CluelessA Trading Frank. It's approximately 8:16 p.m. fashionably late New York style on a very, very chilly evening here on the New Jersey, New York waterfront. It's the 2nd of April, 2019, the beginning of the second quarter of 2019 for our financial industry and all our great U.S. corporate companies. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. This session will be recorded, uploaded to the Google YouTube channel for free viewing by all members who can make it tonight, and as well as anyone with the internet connection. Keep in mind that almost every single video cast that I put out there, and I would say from a mathematical standpoint, more than 70% of the forecasts and the overall picture on the market has come true. That is the essence of what we do here at CluelessA Trading. We rely less on our emotions, more on the tactical charts, and mix it in with the behavioral finance part as to whether people are excited or not excited, and mix in with the fundamentals, part of the fundamentals on individual companies, as well as the macroeconomic picture of what's happening in the global markets and the US markets, mixed in with and these are all components of my modeling that I do, mixed in with the political atmosphere in the United States, whether it be US-China trade tariffs, whether it be the Mexico-Canada deal, whether it be sometimes positive, sometimes outrageous tweets coming out of our president, President Trump. And all that is mixed in and produced on real-time charts on the Clueless8 real-time Twitter feed, Clueless8 RT, which are privy to members and free trial subscribers, not to everyone out there, and they take full advantage of it. On that note, keep in mind we do have a terrific Instagram channel, which is used for promotional purposes, not for real-time trade alerts. And at the end of the evening, I take some time to put out highlights of trades that we do. And it's extremely important for all members to follow the Instagram channel purely for a simple reason. They can see the actual options charts, which some of them I publish during the day, but most of the times I do not have the time to do it because I'm putting out the alerts out there on the real-time Twitter feed. So do take a look at it because it is exciting to look the actual options charts on trade alerts that have worked huge and which you all might have taken advantage of. So please follow us on Instagram. It's a great marketing tool and it's also very helpful to all of you people. On that note, we have a great member here and a loyal member and a good friend, House, who has been with us for a while and can certainly tell you what I do. So if anyone ever wants to get a little outside or inside knowledge of his experience with CluelessA Trading, with the House's permission, I would like to say that you can certainly contact him on real-time chat or send him a quick DM on Twitter. If that's okay with you, House?
Yeah, no problem.
Okay. It's always good to know from somebody from the outside, meaning that a member, instead of me as a content provider and the trade and the founder of CluelessA Trading telling you what to do. It's good to always hear from somebody else who is trading from the outside using many of the tactical trades and their own ideas, of course, on making money in the markets. Okay. So what we're going to do, we're going to try to keep this really short. If I can keep this within 30 minutes, that'll be an achievement on my part. So let's start. So first of all, the bigger picture. You can see exactly what's going on. Every single day, I'm showing you where the support levels are, the gaps. This is a gap, the red zones. Anytime you see red, that means that's where it might come to or where you need to short the market. It's not always what I do, it's what you do on your end. After all, the final responsibility always lies with your individual trade. So the charts are there to give you a very, very solid GPS roadmap on this extremely volatile market. As you can clearly see, we have come from, since the 10th of March, to give you an example, the bottom in the market, at least since the 10th of March, we have come all the way up. Trying to put this out. Bear with me. All the way up here. That is a lot of points. That's from, you can see the red marker here on the support from 27.21. Do the math. I'm doing it for you. To all the way up here where we went to today, which is 28.70, around there approximately. That's 149 S&P handles. So let's do the math here. This whole move, the purpose of these webinars is to show you what might happen going forward. It's also to go back and understand where we came from and what we did wrong and what we did right. Some of us do some things less wrong and more right, and some of us, or some of you, do more things wrong than right. So you can always reverse that ratio and focus on the charts and do more things right than wrong, and you will be well ahead of the game. So this move here is 149 points, 149 handles on the futures, which is approximately, give or take a few points on the S&P 500. The conversion ratio is generally about 7 on the Dow points. So multiplied by 7, we have come 1,043 points in less than 3 weeks. 1,043 points on the Dow Jones. This leads me to my next, the segue to my next thing, which has to do with behavioral finance, which is extremely important because once we get our heads fixed right, we can do a lot of great things in life and in trading. So we have come 1,043 points since the 10th of March, which is approximately 3 weeks. In 3 weeks. Sorry about using the mouse as the cursor. I don't have the writing tablet connected tonight. So we have come in 1,043 points in approximately 3 weeks. So the question remains, why is it so difficult? The question remains, why are so many people not making money or losing money when the markets have come 1,043 points? The simple answer is volatility. The simple answer is volatility. What is volatility? Volatility is you're going to get there, yet along the way, there are massive snowstorms, rainstorms in Seattle, heavy rains, you're skidding and sliding. So what are you doing? Are you still driving? Or are you stopping? Or are you slipping out of the road? The only way you can manage this type of volatility is by following the charts. This is not a marketing pitch. It's the reality of the business. I keep on saying this. I'll keep on saying this till I keep on running this service. This is what I keep on telling myself. And every single movement along the way, I've been there. Every single day, every 15 minutes, every hour, every 2 hours, 24/7 during the trading day, Clueless Day Trading has produced the guidance and the tactical charts to guide my members and keep an eye on the big picture, which we're going to look at the bigger charts in a few minutes. to keep them on track so they don't slip and slide and land in the ditch and AAA doesn't come to pick them up. There are no perfect moments in the market, ladies and gentlemen. I'm being pretty serious tonight, okay? Because I'm here to always help. But you can only help yourself if you listen and apply the principles of trading, the methodology of trading that I keep on showing. This is not like your other service that says, okay, trade what you see. That's the most garbage thing you'll ever hear. Trade what you see. By the time you see something, it's over. We use predictive analytics and we trade what we see, but with an eye on the internals, on the candles, on the stochastics, and all kinds of stuff. So that old-fashioned way, you hear a lot of services, and I mean, I track a lot of things. They say trade what you see. That's garbage. Never cost average. Sell your losing positions and get out. Yeah, right. If that was the case, you'd be losing position for the rest of your life. Something goes, Amazon goes down 40 points. Tactically, it hits a low. Okay, this is not an Amazon chart, obviously. Why, you don't buy it? So what they're talking about is the old-fashioned legacy grandpa's market. No offense to grandpa. I miss my grandpa. Old-fashioned legacy trading where humans control the market. Humans do not control the market. People like House, who have been with me for years, they took them a little bit of time to understand that. Now he gets it. I'm not trying to stroke House and like say, oh, he's great, but this and that. But he gets it. And many of my members are getting it. But get it faster. Don't wait around too long. This is not rocket science. I'm showing you stochastics. I'm showing you McClellan oscillators. I'm showing you have to understand. My webinars explain the basic to intermediate principles. The people who take the ACS, advanced coaching sessions, understand the hardcore dynamics, and they run with it. It's not what you lose on 1 or 2 trades just because the market opens down 100 points or the futures open down 20 handles. It's what you do during the day and the following days and what you stick with. If trading was that simple, everyone would be a millionaire. Trading is simple if you understand the methodology and especially the clueless 8 trading type of style. You can consistently make money and control your losses. Look at these charts. Every single line, every single structure is talking to me and to many of my members. When I say bull flag, they know what it means. When I say pattern completion, they know what it means. When they see these lines, they know where we can come down to. When they see each of these candles, they know what we're talking about. That's the difference between Clueless 8 trading and the rest of the other services, who are always trying to follow the price momentum, price and volume. It's not that anymore. And some of my members are still stuck in the same thing. So we're here to help. Reach out for help, and you shall get it. This structural chart talks volumes to me. It's telling me I know where I can fall, where I need to cost average, where the gap is, where we can bounce from, what these candles are all about. And then you have to rely on my expertise on 14 years on Wall Street, my gut feeling, because I am deep inside the markets, to give you an overall assessment of whether the uptrend is still intact or whether there is technical damage on the longer term charts. So that's my job to do. Your job is to jump into the alerts, manage your positions as much as you can. And everyone needs help. That's the reason why I offer out of my own family time, because I'm a big family guy. I got a great son, I have a beautiful wife, I have 6 rescued pets. I don't live a lavish lifestyle. I have a good life, but I take time away from those beautiful things that I have in my life to offer these advanced coaching sessions, sometimes at the end of the day on market days and mostly on weekends in the morning, in between my strategic webinars that I produce 2 or 3 times a week, mostly 2 times a week, midweek and end of the week. So if you don't want to take advantage, if you want to keep on doing the same stupid things over and over again, like we say in New York, you can go F yourself. That's serious. All right? Because if you're going to keep on doing the same things, stupid things over and over again, what am I supposed to do? Say, oh, I'm so sorry, you did that? No. We're tough guys here. Not just because in New York, that's because, I wasn't born with a silver spoon in my mouth. So get the F up, grow up, learn how to manage your trades. It ain't easy business. But then you take a win and you're up 340%, and you take a Facebook that is up 730%, literally today on the April 5th calls. And even if you caught like 400% of that, first thing in the morning, I heard the Deutsche Bank upgrade. I looked at the chart, which we've been tracking, by the way, for a while, and it's overall been a very big winning trade. I jumped into it, and before you know it, it's up 90%, 100%, 200%. So don't give me a bag full of frigging excuses that you can't do it. End of story. So that's what we do. All right. So here's a behavioral finance picture. What is happening to the market is actually really good. House, you know why? Take a guess.
I actually don't.
Okay.
Okay.
I'll give you a hint. House. I'll give you a hint. What's happening in the market is the market acting, and I'm going to give you a little hint. Is the market acting like very selective? Meaning like, okay, market's down one day, but certain stocks are up, and market's
Yes.
acting?
Yes.
Yes. So what do we call that? A selective stock market, right?
Yeah. Stock pickers market.
Yes. See, I knew you'd know the answer. This is a stock pickers market. Thank you, House. This is what we call a stock market. A stock market is not 100% correlation with S&P 500 and Dow Jones Industrial Average. A real stock market, as House just correctly answered, is a stock pickers market. You have to be selective. It's been going on for a while like that. And that's the reason why I've been hitting some big runs on stock, regardless of what the market's doing. Correct?
Yep.
Exactly. So your job is to be a stock trader and an overall market trader too, in the form of the SPYs, the Qs, primarily that we play. I haven't played the IWM lately. I will get into it soon. And the DIA, the Diamonds, Dow Jones Industrial Average ETF. But this is truly what we call a stock market. So some of you who have been trading for a while, or some of you who have been kind of new, remember, people trading for 10 years and people just started trading 2 years ago. I think the people started trading 2 years ago, and I've said this on my initial introductory calls when I asked, when we have a little financial profile of members coming in, so I can give them a better guidance on how to navigate my service and make the most. I always say that if you've been 2 years in the market, you're far better off than somebody who's been in the market for 10 to 15 years, because they're full of crappy baggage in their head, because they're so used to the old style that they can't figure out why this market does what it does. And that applies to retail emotional traders, RET traders, applies to hedge funds, applies to institutional managers, and a whole bunch of Wall Street gooks. And they were all my colleagues, by the way, back in 2010, 2011, when I left Wall Street. They're all in the same friggin' boat. So I would say that the newer you are in this market, the newer system that you learn, and hopefully you will clearly say trading, you will really learn the algorithmic high frequency trading type of market, then you are much better off. So coming back to it, kudos to House for answering the right question. A right answer, yes, this is a true stock market. And this is the way it's going to be going forward. And of course, all boats won't be lifted just because the Dow Jones is up 700 points. Certain sectors will be lifted. On certain days, you will see techs being up a lot. The high beta momentum techs, the FANGs and the supplemental FANGs. And then you see biotechs down. Industrials may be down. This is not the market from 4 years ago where everything lifted just because the indices, the broader indices were higher. You understand what I just said, House?
No, it was evident today.
What was that, sir?
It was evident today with the Dow down,
Absolutely.
NASDAQ up.
Absolutely. Absolutely. And look what the media said. Dow lost 3-day streak. In the meantime, we had some of our biggest gains today, which you were involved in. Congratulations. The Facebook, the wins, casinos. You know? So there you go. This is the stock pickers market. This is the stock market. So if you all who are going to be listening to this down, hopefully soon before trading tomorrow, if you want to be a trader, be a stock trader. Change your mentality. Okay. So let's take a look. Let's start off by looking at the charts. And I'm going to keep it real simple. The bull flag is intact. Here's your big, you can call this a, and by the way, please listen to my last video. I said this was a high probability thing that might happen, and it happened. You see, I can't be right anymore. It's up to you guys to figure out how much of the rightness that I produce that you guys going to take. I said there's a big possibility this was going to be a W dragon bullish ascending triangle move. Ascending triangle broke out on Friday. And now we're in a bull flag channel. This is a bull flag channel. The bull flag channel doesn't get broken till we break below 2860, 2850. And even then, we could come back and test the gap, and we would still be not in a bull flag, but we'd still be in an uptrend. So just to show, you can call this I called it a dragon bullish. There you go. Beauty. W. Broke out of it, and then we are consolidating. So imagine this. Dragon bullish and a consolidation channel. That's like a signature for, it's not WWF. What's the one which has that, some designer has this symbol? House, can you think about that? What was that? I know it's in the back of my head, but I can't say it.
That was WWF actually.
No, yeah, but no, it was some other designer, some fancy designer had that symbol. So anyway, this is a consolidation channel. This is where we are. Watch this. If anyone doesn't believe in technicals, then they better stop believing in it, all right? There, this is what we're doing. And this is a real live candle. Futures are right now up to 50. So when you see stuff like that, and we started to see a quick, fast breakdown, we shorted it, lost about 60% on it from calls that went from like, what, 80 cents down to 40 cents. Doesn't matter. That was a hedge. No big deal. Most of it, all the other stuff were long. I expected it to come down here. No, that's the sign of a short-term, intermediate-term bull market where the shorts get sucked in and then get chopped, ambushed. So this is the same thing as this. I know the designer thing is going to come through. It's like a WF kind of thing. Anyway, that's where we are. So if you want to keep on denying what the market's, ooh, look at that. Futures are just jumping right now, 350. By the time we get done with this session with my good friend House, we'll probably be up 10. Why do I say 10? Because that's the upper end of the channel. Look, I don't just make up things. Hey, you might be with other services, great guys who got a better spiel on what they're saying. They make up a lot of stuff, but nobody will dissect the anatomy of the stock markets, individual stocks like Cludesay Trading here does. And that's a fact. It is a fact. Go back and listen to my videos. Go back and look at my Twitter feeds, and you will see how right I am. Now, how much of the rightness can we capture? That is the emotional part of it. And I sometimes fail on it too, because I sometimes sell a little bit too early if I have a bigger position, and I keep on slapping myself. I literally slap myself. So if you think that all of you are satisfied with making 10, 20% on 100 to 150, 200% type of gainers that I'm showing on a consistent basis, then you do need to slap yourself really hard, figuratively and mentally, and maybe physically, like slap yourself. Because I'm not really happy with everything that I'm doing, even though I'm doing pretty good, pretty great. I'm not happy that the fact that sometimes I'm being so disciplined that I'm selling a little bit too much along the way up when I know it's going to go that way up. Holy cow. There must be some news that broke, and I'm checking on my other screens because now we are ramping. We are right now up 6 points, and you can see that here. So during the day, when we get these type of things, we're making 40, 60, 70% on a 15, 30 minute, 1 hour basis. And this is a 15-minute chart. And that's what we do here. And these charts are evident on what is happening. If we broke below, we know we would have where the support levels would be. And if we broke above, we know along the way or where we hit, where we need to take profits. You're with me on that, House, right?
Right there with you.
Okay, sounds good. And by the way, I don't pay House. He doesn't pay me. The only thing he pays me is a small fee every month to make a lot of money. That's all. So for anyone listening saying, oh, this guy's a little, he's like a patsy, brought him in. Nope. And you don't, do talk with House because he'll smack you around if you ever tell him that. I'll tell you that. He's a much tougher guy than most people that I've met. So saying all that, this is where we are. That's your consolidation channel. We're on the upper end of the consolidation channel with futures up about 550, 5 to 6 handles after hours. I bet you there's some other stuff going on overseas that's moving the markets. Part of it has to come from Asia, of course. We're in the midst of major heavy-duty trade talks. Good old Donald, my New York neighbor, Donald Trump, Donny boy, needs the China trade deal as much as China needs. In fact, China needs it more, and so does the U.S. So enough of like the politics and all that garbage. Economically speaking, we both need the U.S.-China deal to some degree. And of course, we have the shenanigans played out of the House of Commons in England with Brexit. And now Theresa May is now begging her opposition leader, who is part socialist, Jeremy Corbyn, to work out a deal. So it doesn't matter what little boy Trump Jr., kid that I don't like because I've met him a couple of times, trust me, and I've said this in my previous webinars, it lectures the British Parliament what to do. Doesn't matter. The Brits are going to do what they do. Brexit is going to be delayed, or there will be a softer Brexit, which will help Britain get out of the clutches of the European Union. Because European Union are also a bunch of idiots, if you ask me. A lot of old guys, very rich European guys. Some of you visited Europe, go to Vienna. So it's going to be okay. But a hard Brexit, where England just walks away, will affect the UK markets, economy in a big way, and will affect short-term our markets in a big way. So Brexit, and this is looking good. Okay, that's your short-term chart. So try to understand as much as possible. Try to DM me, direct message me for information, how much I can help you, and then we can move forward from there. That's your thing. There we go. So looking out a little bit more, predictive analytics, where can we go? We get here, we have a major, that's your 1.61, 161.8% Fibonacci level that I talked about. Please listen to my videos from about a couple of weeks ago. And I said this would happen on the eve of a US-China deal. We don't even have a frigging US-China deal. And we're almost getting to 161.8 Fibonacci level. So you tell me when there's a US-China deal, what the heck's going to happen? You can bet your butt that we're going to break out and we're going to hit towards 2,900. We're going to hit towards 2,900 easy. And the highs, retest the highs of 2,950 or so on the S&P 500. Just to be technically correct, I'm looking at my other screen, the high on the S&P 500 was 2,940. So why can't we go to 2,940 given the pace we're going in right now? Let me just show it. And I'll show you how we get to 2,940. This is the beauty about the way I do Clueless Ape Trading does technical analysis. No bullshit. I'm just showing you in real time. The points match. I don't just draw the lines because I'm like, okay, let me have a couple of drinks and draw lines. No. This comes to 2,920 and 2,940 is up here. So I'll be honest with you, only way I can show it within mathematical reason, not this. Bear with me. This. I touch the base here from the 21st, from the 3rd of March. And guess what? And if you don't think this is technical magic, this is the reason why my charts are so accurate, then you're deluding yourself into whatever. Anyway, I'm not here to console you on your mental deficiencies and the mental demons that some of you go through. But look at this. Forget this line, for example. Let's get this out. All I did was touch this upper end right here, the Fibonacci level when it was 100. Remember, 1 is 100. This is 161. You have to just, 0.5 is basically 50% Fib, what we call Fib 50. You're with me on that house, right? Fib 50 and all that stuff.
Yeah, I got you.
Okay, yep. This old Italian mathematician who Fibonacci, like they say, was brilliant. And look where we are. So all I did was touch that and draw a parallel line. Remember, life has to be symmetric. What's beauty in life? House, you ever think about it? What is beauty in life? When you look at somebody, you look at a car, you look at a woman, your wife, or for single guys, the girlfriends and whatever, the partners, whatever. What is beauty in mathematical terms? Which equals profits in mathematical terms in trading. What is the key word? What has to be right? Physically speaking.
Got me there.
What was that?
So you got me on that one.
It's very simple. Everybody knows the answer. Nobody thinks about it. That's the reason why you let me answer the question. Symmetry. Symmetry. When you look at a face, it has to have symmetry. If one eye is far ahead of the other, on the top, if things are lopsided on a face, if things are lopsided in a body, if you go to the gym, like symmetry, same thing as pattern symmetry in trading is what creates beauty. Do you agree with me or not? When you look at a car, let's forget about humans, because Humans have to have symmetry. The eyes, the ears, the nose, the body. Look at cars. What do you love about cars? I know you love cars. We've talked about it. You like, there has to be symmetry. The angles have to be symmetrical, correct?
That's correct.
There you go. The same thing in chart pattern and trading. There has to be symmetry. So when you look at this chart, do you see symmetry? Do you see actual parallel lines? You see an actual curve? Do you see symmetry in this chart?
Yes, I do.
What does that mean? It means money in your pocket. If you understand the symmetry, there has to be pattern symmetry. So that's basically what it is. So at this point, we see pattern symmetry. These are the upper end of the lines. This is what's going to happen if the China deal is done, which I know good old Donald Trump, my New York boy, is going to get it done. He's got a lot of faults, I'll tell you that. But one thing he's going to get done for his own sake, for winning the elections, or trying to win the elections. Like they said a long time ago, it's the economy, stupid. If the economy is good and people are having more money, then they leave a lot of other stuff aside and vote for the incumbent who is keeping the economy strong. So this is what's going to happen if the China deal is done. If it's not done, we know by this chart where we can go. You're with me on that, correct?
Yes.
There you go. That's the reason why we can consistently trade the SPY lottos depending on different time frames for a good solid 30, 40, 50, 60, 100, 200% on a weekly basis. But if you're not situated right on the setups, in this case a perfect dragon bullish volatility, of course, intraday, then you're not going to make money. You can't come in the middle of the day and say, oh, I want to make 100% of my money. No, doesn't work like that. Yes, you can with the wins, with the Facebooks, high beta momentum stocks, like, going nuts in the middle of the day. That's different. But you have to have trade setups. Key rule, critical rule in trade management. You have to have trade setups and you have to sell along the way as it's moving higher. So that's your short-term chart. It cannot get any better than this. Futures right now are up 10. Did I tell you that futures were going to be up 10? They're up 10.25. We're going nuts right now.
Oh, that's so beautiful.
I mean, you can't get any right than this, man. If we're all having drinks and I invited all my members and say, listen, let's have some cognac, let's have some nice IPA beer, let's have whatever you want, like, moonshine. And I said, we're going to have futures up 10, but, when futures were down about a 1 or 2, they'll be like, oh, yeah, okay, sure. By the time they had the third drink or second drink, futures are up 10. Futures right now are up 10.5 and running. Thank you very much. Do I really need to keep on proving myself? Now we're breaking some key levels. We're breaking key levels here. Go nuts. What's the news? Can't find my second iPhone like lying around somewhere, but let me just do Bloomberg on this one and I'll tell you all. And you know what the first thing on Bloomberg headline is? This is the beauty about negative bears out there. It says analysts are worried about a few things. Theresa May asked Jeremy Corbyn for help. I already covered that. That's the garbage you hear from the media. That's on Bloomberg. While the real thing happens on my charts. So I'm going to leave it at that. Because I think we covered some very serious stuff here. So some of you who are still freaking scared, maybe you're scared of life, maybe you're scared of your partner, your wife or husband, I don't know. We all are, right? But but you're scared of trading and you can't still take advantage of these killer charts that I'm producing intraday and overnight, just seek for help. Just get in touch with me. On that note, House, I know you always want to see a stock. What do you want to see?
I actually want you to, can you show the McClellan?
Oh, yes. Thank you very much. The guy reads my mind, man. Thank you. Okay, the McClellan oscillator. I don't know why it excites House so much, but maybe because of the old days when I used to explain the McClellan oscillator like it was like dating one of the hottest girls in New York. Sorry about that. For some of you, maybe the hottest boys in New York, I'm not sure. But the thing is, yes, the McClellan oscillator. Now, why is the McClellan oscillator so important? Well, listen to my old videos. So let's look at the McClellan right here. McClellan's looking good, House. Time to really buy was the beginning of March when we were down 66. Now look at what the McClellan is doing. This is what we like. The stochastic, slow stochastic is moving up nicely. This is what we like most. The MACD is just about to cross over zero. That is exciting. So where can the McClellan oscillator go? The McClellan oscillator gets severely overbought somewhere in this range of 80. Can we get there in the next day or two or this week? Yes, because I've said it repeatedly, I'll say it again, that this week will probably culminate into a short-term intermediate tradable top in the market right before tax time. People do sell stocks when they're up on it to pay their taxes, okay? So I would say that looking at a day count sometime by the 5th to 8th of April, we are going to create a tradable top in the market. Maybe we'll overshoot, but before tax time, which comes Thursday and Friday, 11th and 12th, we will have a substantial top. So you have large positions on things, start scaling it down. Don't have to go short, but I'll be the one who's going to basically tell you when we see a technical break and we're going to jump on it. We'll keep some hedges. We'll get into the VIX like we used to. Remember, we used to say, always have insurance. Remember that? I used to write that down, House. Always be insured.
I remember.
Have you heard me say that lately?
I haven't actually.
Exactly. What's the market been doing? Going higher.
Going up.
Thank you. So that's why it's good. Yes, you can be insured. You're going to lose money. So why not buy the insurance at the lowest level? I can't always pinpoint the lows, but close to it. So we're getting close to it. Where we're going to buy some nice VIX calls and make 40, 50, 100, 200% on it. On that note, let me just put it this way. Mom and pop out there are now excited. They want to get into the market, always at the tail end. This is what we call wave 5. We're in the midst of wave 5, Elliott wave theory. I've explained this in my previous webinars. This is when some of you who just sat around doing nothing at the lows are now getting in. Fine, you still make some money, but you'll never make the big money that traders and members made when they listened to me and bought the McClellan oscillator down here. And as I'm going to show you next, the SPX 533 swing charts and at the beginning of March. And you're not the only one. The same lemmings are on Wall Street. The same lemmings are on TV, talking about a global recession, talking about a US recession. I'm not a global economist, but I do understand economics better than most people out there, macroeconomics. Well, that's it. So this is looking good, House. Okay, simple terms, we can move higher, and we're looking good. Now, let me show you the SPX 533, another predictive chart. I don't think any other service ever showed this. If anyone does, I'd like to make friends with them. I'd like to bring them in to give a webinar. This is the ultimate predictive analytics chart, the 533. What's the most exciting thing about this? Aside from the stochastics, which I said were coming up back at the end of March. What else do you see, House? I want to, not testing you, just asking you. Here on the internals, that is exciting.
You see the histogram going positive.
Thank you. Thank you. No more said. A+, exactly. The histograms have now created the second little block. They're going to create the third block. Generally speaking, it constitutes 1 to 5 days, 1 to 4 days, especially when we are at this elevated levels. Remember, we're at elevated levels in the market, but this is exactly when mom and pop get excited. Okay? It's not mom and pop's fault. It's the garbage propaganda spewed by the media that keep mom and pop poor, because they never buy the lows. They always buy the highs as they're forming. And that applies to retail emotional traders, applies to many institutional traders on Wall Street, blah, 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 blah. So it's not mom and pop alone. You're absolutely correct, House. Thank you. What House is doing is helping members, and the only reason I'm asking him, I didn't coach him on this, to answer certain things that if you guys see it on your own as I'm showing it, you're the ones who are going to do better. We have a histogram which has gone green. There will be at least 2 or 3 other expansionary histograms. Technically speaking, anything can go wrong, as I've said, even though futures are up 10 right now. Not that it matters. We could be down 10 in the morning for all I know. 5 in the morning, my eyes will open up. Then I try to take another little nap, you know. The first thing I do on the iPhone, like, oh, let me check the futures. Like, oh, here we go again. And every time I go, here we go again, meaning like I'm long and we're down 10, it has actually turned out to be my best days in the market. Futures up 20, that means you sell first thing in the morning. Then what do you do all the rest of the day? Unless you get a pullback. You're like, oh, God, here we go again, you know? You got to wait for that pullback. And that probably doesn't come till the next day. So you're just wasting your day because you took your profits down. And if you really rush into futures, E-mini futures handles up 20, you're going to give back all your profits the same day. Am I right, House? It's happened?
Yeah, more times than I care to admit.
I know, you know, so don't do that. I mean, that's pretty much simple. Futures at 20, just sell everything. Have a little bit of positions in there on selected, like, you know, like non-market correlated stocks, options, and like the VKTX, which just went through the roof, things like that, you know, the biotech stuff, and just walk away. You know, every time any trader tries to overtrade when futures open up 100, 200 points or whatever, not 100 points, like 200 points, whatever, Dow Jones futures, it's really a waste of time. You're going to give back everything. So anyway, so this is good. This is still, it is getting elevated, no question about it. But the histograms are telling us we have a couple more days, which correlates exactly with what I'm saying. Till the end of the week, first part of next week, we create a major top. And we hit close to 2,900 S&P. If not, test the highs. On that note, thank you very much for attending, House, and the great questions, and look forward to seeing you guys tomorrow. I truly hope that all of you are doing well, and I truly hope and request that anybody who's not, reach out to me. This is not a market to fear. This is a market to trade. Because remember one thing, last thing I'll tell you, this raging bull market that we're going through overall, it is as difficult to trade for most retail emotional traders than a raging bear market as it is difficult to manage or trade. So the question is, I show you things and I tell you the market's going to go up 1,000, 2,000 points a month ago, 2 months ago, and yet you make no money or lose money. You ask yourself what you're doing wrong. It is not about a bull market or bear market. It's how you manage your trades, how you selectively trade selective stocks, but most importantly, how you manage your trades. On that note, God bless you all. See you guys tomorrow. House, thank you for attending, and see you guys tomorrow. Have a great week. Thank you.